Ladies and gentlemen, good day and welcome to EMA Partners India Limited Q4 FY25 earnings conference call hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Nupur Jain Kunia. Thank you, and over to you, Ms. Jain Kunia.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Nupur Jain Kunia from Valorem Advisors. We represent the investor relations of EMA Partners India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second half and financial year ended 2025. Before we begin, a quick cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by the information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's conference call is purely to educate and bring awareness about the company's fundamental business and financial performance for the second half and financial year under review. Now, I would like to introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. K. Sudarshan, Managing Director, Mr. Manish Dhanuka, Chief Financial Officer, and Ms. Smita, Company Secretary of the company. Without any further delay, I request Mr. K. Sudarshan, sir, to give his opening remarks. Thank you, and over to you, sir.
Good morning, everyone. Thank you, Nupur. Good morning and welcome to our first earnings call to discuss the performance of the company during the financial year 2025. In the interest of some of the participants who are new to the who are new to the company, let me first start by giving a brief overview of our business. So, EMA Partners India Limited is a leading executive search and leadership advisory firm headquartered in Mumbai, specializing in recruiting top-tier executives for Indian and multinational companies. And we also work with leading investment firms and private equity firms for their portfolio companies and so on across various industries. So we are a member firm of EMA Partners International Limited, which is a global network of executive search partners present across 30+ countries globally. And since 2003, we have expanded strategically under the global framework of EMA Partners, setting up subsidiaries in Singapore in 2011 and the Middle East, specifically Dubai, in 2016. So these markets, three markets, India, Dubai, and Singapore, form the core of our operational presence in the executive search business. We are approximately a team of 70+ professionals in the search business. Our services span the entire, if you look at as a company, our services span the entire white-collar hiring spectrum, with EMA Partners positioned at the top end of the spectrum, focused on retained executive search, specializing in C-suite leadership mandates. And over time, we have also recognized a significant opportunity in the mid to senior segment, the hiring segment, particularly in markets like India and the Middle East. So, given our deep networks in the CXO board levels, and also we also work with some chairmen as well and promoters, we saw that there is a potential to bring in institutional capability and process rigor to a space which is the mid to senior level hiring segment, which has traditionally been dominated by boutiques and smaller firms. So this actually led to the creation of a new brand called James Douglas, a distinct brand under our umbrella dedicated to mid to senior level hiring. So we see this as a strategic growth area going forward. But as of FY25, approximately 85% of the revenues were still driven by the executive search business under the EMA Partners brand, but we do expect the James Douglas business to scale meaningfully in the years ahead. Building on this momentum, in fact, a key milestone this year was the launch of James Douglas Global Talent Solutions, what we call it as JD Global, is our next generation RPO brand. RPO stands for Recruitment Process Outsourcing, which is focused on some of the core sectors, high volume hiring sectors like BFSI, technology, life sciences, and manufacturing. So this business will be powered by our proprietary AI-driven platform, which is called Match Core, and which will typically enhance the recruitment workflows. It will work on shortening the time to hire and improve the quality of hires. So we have brought on board Harish Pillai, a seasoned RPO leader who was the erstwhile managing director at Randstad Sourceright, and he also worked with the Allegis Group. So with comprehensive solutions from enterprise talent acquisition, outsourcing to project-based hiring and employer branding, James Douglas Global is set to drive significant growth in our talent solutions portfolio. At the other end of the spectrum, we are also experimenting with a technology platform to address high-volume, entry-level, white-collar hiring through a recruitment marketplace. So that's it. So we are excited by the possibilities it presents and are investing prudently as we test the model. We have built a resilient business underpinned by long-term client relationships and a global yet locally nuanced approach to leadership hiring. With that, now I would request our CFO, Manish Dhanuka, to provide the key financial and operational highlights for the second half and the financial year ending 2025. Manish, over to you.
Thank you, sir. Good morning, everyone, and welcome to the earnings call. Let me first brief you on the financial performance for the financial year 2025. For the full year, the consolidated revenue for operations stood at 74 crores, representing an increase of approximately 10% over the previous year. Revenue from our core executive search business in FY25, excluding my R Cloud technology business, is up 14% year-on-year. Revenue from top 10 clients in FY25 contributed 35% of overall top line, which was consistent with FY24. Revenue from technology business witnessed a 31% drop year-on-year during FY25. EBITDA for the year stood at 13 crores with EBITDA margin of 18.2%, and profit after tax was reported at 13 crores with a PAT margin of 17.06%. Employee cost excluding tech platform and ESOP cost grew at 18%. This increase is stemmed from a strategic decision to bolster our leadership team by onboarding senior management and key management persons in search business. Primarily, we have added 5 client-facing consultants in H2 FY25 to the executive search team between India and Dubai. These investments do impact short-term profitability. They were made with a long-term view to enhance our operational capability and drive sustainable growth across business verticals. Depreciation has increased on account of new office and software put to use at the beginning of the year. Finance cost increased during the year due to the loan taken to purchase the new office. This loan has been repaid from the proceeds of the IPO. These initiatives reflect our commitment to build infrastructure and digital capabilities that align with future business needs. Loss in technology business increased from 1 lakh in FY24 to 2 crores in FY25 as the marketplace efficiencies are not playing out. PBT margin from search business dropped by 175 basis points year-on-year to 25.7% in FY25. Furthermore, the drop in net profit was influenced by the introduction of income tax in our Dubai entity, which came into effect for the financial year ending March 31st, 2025. While the regulatory changes affect current earnings, we remain confident in our ability to adapt to new tax environment and maintain fiscal discipline. With that, I open the floor for question and answer session.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Once again, a reminder to all the participants that you may press star and one to ask a question. Next question comes on the line of Bharat Reddy with AB Capital. Please go ahead.
Okay. So thanks for the opportunity. Sir, I have a question. So you have mentioned about an inorganic acquisition in the past. So may I know the status on that?
Yeah, I will take this. This is Sudarshan here. So basically, we are evaluating a few opportunities as we speak. And so once the time is appropriate for us to report, we will come back to the street.
Okay. So my next question is, so can I consider Myar Cloud or James Douglas to be competitor of Naukri in India?
No. I think we do not compete with Naukri. Naukri is a candidate marketplace, whereas James Douglas Digital Talent Solutions is a complete enterprise recruitment process outsourcing business. So that means these companies will end up using Naukri as a sourcing tool, Naukri or Naukri's competitors as a sourcing tool, and we do not compete with Naukri in any spectrum of any of our businesses, just to be clear.
Okay, but you have mentioned in the past that you wanted to enter into mid-level and entry-level hiring through James Douglas and Myar Cloud, right? So that's what Naukri is also doing.
Okay, just to be clear, see, Naukri is a candidate database platform, right? It is a candidate marketplace where candidates go and register their CVs. In our business, there is no database of candidates who come and register with us. So basically, we serve with enterprise clients for their recruiting needs. So it's a very different, the other side of the spectrum. So we recruit for our clients, and Naukri is an enabler for our business. Naukri or any of its competitors would be enablers of our business, where Naukri is a pay-per-use platform, right? Where companies like ourselves, we may use depending on what is the need.
Okay, sure, sir. I will join back in the queue. Thank you.
Yeah.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Deepak Poddar with Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yeah. Please go.
Yeah, sir, my first question revolves around your margins. I mean, in the past, we have been consistently in the range of 24-25% EBITDA margin. And but I think this quarter saw a drastic fall because one of the reasons was your hiring. So how should one look at EBITDA margin over the next 2 years? I mean, FY26 and 27, and in the medium term for next 3 to 5 years.
Yeah, I'm just Manish.
So, sir, we are investing in new businesses, so that will definitely have an impact on margin. But we should be consistent with the margin profile with current year, and don't see significant drop in future in PBT in margin.
Consistent to what levels? I mean, what is the
so for current year, you can put it as FY25 as a margin benchmark for next 2 years with the investment being made across various business segments.
Okay, so whatever the entire year average FY25 EBITDA margin, that can be taken as a benchmark for next 2 years. That's what you're trying to say, right?
Yes.
Okay. And this excludes other income, or this includes other income?
Excludes other income.
Excludes, right? I mean, okay. And in terms of inorganic acquisition, can you throw some light? I mean, in terms of the scale or size of acquisition that we are evaluating right now, something on those lines would be very helpful.
They are at very initial stages right now, and
okay.
So we are not in a position to make any statement on that. The moment we feel that there is we are at a decent level to disclose it, we will definitely come and inform the market.
No. I'm not wanting to understand specific acquisition, but what is the size we are looking at? I mean, are we looking at in terms of a 40-50 crores kind of acquisition size, or a 20-25 crores, or 100 crores? Because we do have cash, right? Yeah.
So we do have cash, that is agreed, but we are not looking at just one acquisition. So there can be multiple acquisitions. So overall size will be close to 50-60 crores. But what will be each size, I can't tell right now.
Okay, understood. And just my final thing is on the growth part. How should one look at growth over next 1-2 years?
So in top line growth, we will definitely look at 15 to 20% growth annually.
For next 2 years CAGR?
Yes, CAGR.
So and the scale of James Douglas will increase. I mean, in terms of revenue mix, I think currently in FY25 it was around 9%, right? So ideally, do we expect that James Douglas can grow at a faster rate as compared to your base EMA business?
Yeah, I will take this question. This is Sudarshan. So, look, I mean, if you look at the last financial year, our core executive search business grew by about 14-15%. And so search business, we expect to continue that same momentum. And if you look at James Douglas, both the global, the James Douglas global business, which is the RPO business, which is the new business, and as well as the mid to senior level business is expected to continue, expected to be key growth drivers for us in the next, 3 to 4 years time frame.
So that we do expect to grow at a faster rate, right?
That's right. Because, see, there are a couple of aspects so that there is a base effect because it's a small business. So that will also kick in as net new growth for us on an overall basis.
Okay. And what is our current search team size? I mean, I think you mentioned, I missed that point.
It's about 70 people across both client-facing and research and the what we call it as the middle office team. So it's
understood. Fair enough. And just one last thing, James Douglas would have a lower margin as compared to your executive search, the suit level hiring?
Yes, it will have a lower margin. But the blended margin we are expecting is around 18% for next 2 years.
18%, right. Fair enough. I think that would be it from my side. All the very best to you. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Praful Rai with Arjav Partners. Please go ahead.
Just 2 questions. One is, when we are talking of growth of 15 to 20%, does it take into account inorganic stuff or it's organic of what you are right now?
It's totally organic right now. Nothing inorganic has been factored when we say 15 to 20%.
Okay. Second question I had was, we saw a decline in revenue. Any specific reason you can attribute to decline in revenue in second half?
The last year, the largest client contributed to roughly about 12.5-13% of revenues. And this year, so while on a positive note, we've been able to spread it out, and also because of their internal restructuring, that from that particular client, the revenue dropped to about about 5.5 crores on a gross number base year to year.
Mm-hmm.
So at the same time, we've been able to sort of manage our growth with new logos.
Right. So that is one specific reason, or any other reason other than this?
I think that is one. Largely, that's a specific reason. And
another question. Yeah. Sorry.
Please go ahead.
Another question I had on the margin front. The earlier business, the original business of the company generated a 24-25% margin. I'm sure you're losing money in the new areas you are focusing on. So I wanted to get a handle. What is the steady state margin of the executive search business, that is the EMA original business, and what kind of losses can we have? Some kind of breakup between the two, because you have to spend money to incubate these new ideas.
So
can we assume that original business has the same kind of a margin profile as probably what we had?
Yeah. So original business will be having around 23 to 24% margin for next 2 years. This may be slightly impacted because we will be expanding those teams as well. And normally the team take a year of time to break even. So they will have some impact for a year or 18 months. But for the new team, we are expecting 24 to 25% margin in our existing core business, and new businesses will to some extent put a pressure on margin for next 2 years, and technology piece also will have some impact. So that is the reason we said it.
Right. So can we, just going forward, can we do a favor? Can we give a breakup of the EBITDA in the core business and the losses in the new business, so that we have a clear view that, okay, this is what the company is spending its...
Yes. So we have definitely taken the input from you, and we'll try to provide the details.
Because that actually puts some clarity when we look at the numbers. Otherwise, what looks at it, we just margin just collapse.
We understand that, and we'll try to do the breakup part.
Lovely. Last question on that is, with assuming that executive search business at 23, 25% margin and the losses there, what should be the steady state margin we can assume for 26 and 27?
So for next 2 years, we have said that the margin profile will be around 18%. And then
18%.
And by next quarter and next half year end, we will have much better clarity with the investment being made and the clients being onboarded. So we'll be able to give you a better guidance for next 2 years by end of next half year.
Okay. Can we ask one more question, or if I have a room to ask, because...
Please go ahead.
Hello?
Please go ahead.
Yeah. What is the risk you see in the new ideas you're incubating?
See, these are proven businesses. So the mid to senior level. So the big risk, if we have to actually quantify, is our ability to add the right people to the business, and of course the overall macro market conditions, which will also determine how quickly or how fast we can grow. Because it's a given fact that there is a large market out there, and there are lack of institutional players in the segment. So we, being an institutional player, we will hope to capitalize. So the two aspects to take into account is the macroeconomic situation, and second is our ability to add the right people to the platform.
Okay. Thanks a lot, sir. Thanks a lot.
Yeah.
Lovely. Thanks.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Urmish Shah with Moneywisers. Please go ahead.
Yeah, thank you for the opportunity. I'm on your slide 21 of industry-wise revenue contribution. Sir, my question is just for the 2 or 3 years down the line, will this revenue contribution be intact? Do you see that to be intact?
1 second, let me just look at the... Just give us a second.
Or is it 20? Slide number 20. Slide number 20, sorry.
Slide number 20, right? Let me just...
20 or 21. Industry-wise revenue contribution. I can't see the number.
Yeah, no, I have that in front of me. 20.
Industry-wise revenue contribution.
So we will expect an uptick in some of these areas, especially IT and telecom, which should actually so you will see a slight change in the mix, and also as the numbers grow, we expect growth to kick in from these sectors where, especially healthcare, pharma, and IT and telecom, we expect an uptick.
Okay. Sir, the reason I ask this because IT has gone through a slowdown, and FMCG and retail also, before, if I talk about India specific, there's been a slowdown in the rural economy. So both the sectors have gone through a comparatively challenging phase, and that's why I asked this.
No, I'll tell you why we are also talking about it. Is that there is this GCC aspect which will kick in and which will get classified within the IT and telecom sector. So there we are expected to grow through our new businesses, especially James Douglas Global. So you will see an uptick there. And primarily just do, this is the breakup based on our executive search business. As the new businesses add, you will start seeing the other sectors actually bringing in more numbers there, especially IT as well. But it's also on a positive aspect. If you look at it, we have a very strong presence in industrial manufacturing and BFSI, which gives us an opportunity to also not only increase our pie there, but also our ability to cross-sell for our new businesses.
Right, sir. And in this second half, you said you have onboarded 5 clients, is it?
No. What we said was we have added new 5 partners. Client
5 partners.
Client
okay, fine. Okay. Yeah. My bad. Sorry.
Okay, no problem.
Okay, and just wanted to know, if you onboard a new client, what is the time period from selecting and onboarding?
It depends on the business. In executive search business, it's almost immediate because the day a client signs the contract, the assignment is already started. Whereas in an RPO or a JD Global business, for instance, there is an onboarding phase about 4 to 6 weeks before the client can be onboarded, and then the ramp up will happen because that is about a mass recruiting business. Whereas in search business, our work starts the day the client signs the contract and agrees to our terms of engagement.
Okay, and maybe a maximum % of your clients will be retained?
Yes, absolutely. In the executive search business, we are 100% retained business. Yes, that's right.
Sure. Okay. Thank you, sir, and all the best.
Thank you so much.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Deepak Poddar with Sapphire Capital. Please go ahead.
Yeah, so just one small thing I forgot to ask. Now, in terms of, so we have seen some increase in your tax rate because of Dubai thing. So what's the tax rate we should expect going forward?
So we are expecting it to be at around ETR of around 22% going forward.
22% tax rate.
Yes, ETR kind of 22%.
Yeah, fair enough. Okay, that's it from my side. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Nupur with Earth AIF. Please go ahead.
Well, thank you for the opportunity. My first question is that currently we have presence in 3 countries, India, Singapore, and UAE. So when we are thinking of inorganic acquisition, so are we thinking for that acquisition in these countries only, or we are exploring some other countries? Are we thinking of expansion in some, different countries, or will remain confined to these only?
So we are still in the process. We have identified a few opportunities in the Middle East as well as 1 or 2 new markets. But given the sensitivities of involved with, we are not able to actually specify which markets exactly. But we are looking at more than 1 country.
Okay. Secondly, just want to ask that we have 8 subsidiaries. So it will be helpful to us that you can please let us know that what margins our subsidiaries are contributing or generating for the EMA partners.
Okay, sure. We'll try to put it in the presentation next time.
Okay. Thank you. That was from my side. And good luck.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Nilesh Doshi, an individual investor. Please go ahead.
Good morning and congratulations all for hosting the first Concall after the IPO.
Thank you.
So actually, 2 things. First thing is most of the figures have been already informed. So what I wanted to know from you, what is the vision you see for 3 years? What are you setting up for the next 3 years?
Okay. So we've spoken about this, Nileshji, in the past. So if you look at it, while the core executive search business, we will continue to grow that business both organically and as well as inorganically. When I say inorganic, it is also with addition of new partners. That is almost like inorganic growth. When we add Okay, so that will be the key. While we have client relationships at the top in that business, we want to leverage those relationships to expand the pie with each of the clients where we already operate at the top. So that's the reason why we've got this James Douglas business, the mid to senior level hiring segment, as well as the new business which we have just set up or announced a new leader yesterday actually. So that is the business which is the enterprise recruitment process outsourcing business, where we will continue to, or we'll look to leverage our technology capabilities and the platform capabilities and look at building higher efficiencies in that business. So to answer your question, I think our growth, the net new growth will come from the James Douglas business, the RPO business, which will give us scale, and the mid to senior level hiring business, again, which is a net new growth. So in a 3 to 5 year time frame, if you look at our business, you will see that James Douglas Global, which is the RPO business, as well as James Douglas Professional, as what we call it, will be significant contributors to our top line and bottom line.
So can you just spell out something like in 3 years, can we reach 500 crores of top line?
I want to stop short of giving you a number, but you can be rest assured that this will be important key pillars for our growth going forward. And because we also believe that there are synergies between each of our businesses, and one will feed to the other. And so in equal measure, you can say that both the new businesses on a 3 to 5 year time frame could end up becoming as large as the executive search business today.
Okay, thank you, and all the best.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Dhanvit Merchant with Dhanvit Merchant. Please go ahead.
Yes, sir. Good morning.
Yes, please.
Hello. Am I audible?
Yeah, can hear you.
Yeah. Yes, sir. So I wanted to ask that the revenue from Singapore in the FY25 was significantly less, even though the overall scope of the Singapore business is less for our business. I wanted to ask that whether it will continue or it will probably, like, operationally it would be difficult for our business to handle it.
No, Singapore, there is a specific focus. We are looking to restructure the business and add new consultants to the Singapore platform. So you will see, good improvement as we go forward on the Singapore business numbers.
Okay. Okay, fine. And another question is that you are searching for some business in GCC countries, which includes Saudi Arabia. And EMA partners have already presence in Saudi Arabia. So will it affect our positioning there, or we will not be able to even access that particular country for the search business?
No, see, we will be able to access that market across all businesses, but we will be working in partnership with, especially in the search business, we'll be working in partnership with our existing partner there for EMA partners. Whereas James Douglas, both James Douglas Global as well as the mid to senior level hiring platform James Douglas Professional will have free access to that market or any market we choose to. So those are brands we could take it anywhere depending on the business plans what we have.
Okay, good. Okay, thank you. That's it from my side.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes to the line of Bipin, an individual investor. Please go ahead.
Yeah, please go ahead, Bipin.
Mr. Bipin, please go ahead with the question. Mr. Pippin, please unmute yourself and go ahead with your question. Since there's no reply from the line of Mr. Pippin, a reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, we have a question. The question comes from the line of Gaurav with India Bridge. Please go ahead.
Sir, I hope I'm audible.
Yeah, Gaurav, please go ahead.
Yeah. Sir, so you mentioned that you onboarded 5 new customer-facing personnel. So what would be the cost of an annual rate salary that you're paying these individuals? And after they're bed in your company, from next year on, what kind of numbers can they contribute to the top line?
I don't know whether we can give you granular information on that, but largely...
I just wanted to understand the economics of your business, so that's the core idea.
Yeah, Manish?
So what we look at is whatever person we hire, by end of third year, he should be contributing 3x of his cost.
3x?
Okay. By end of third year.
And okay. And it breaks even within 12 months?
12 to 15 months, he should break even.
Okay. And, your industry, especially in the executive search business globally, there are a lot of people who are running it as, in a mom and shop format, one-person company kind of format. So what's the risk of losing these, people who are contributing so handsomely to your top line? What's the attrition like, and what's the concentration from a client perspective also? I want to understand it both ends.
If you look at our track record over the last 15 years, we have retained all our core key performers, and we continue to, what we expect to retain all of our key performers going forward as well. And then second, to answer your question, while there are mom and pop shops and individual consultants, the benefits of a large platform like ours is something our consultants realize, and there is value in being associated with us. So we do not expect significant attrition, even going by our past track record, and in the future we would expect to maintain a similar trajectory in terms of our ability to retain people.
And, in the past 3 years, I was looking through your revenue. There was a year where you dropped, some revenue, probably because of you were operating on a high base post-COVID. But what part, is there a part of your business which has some sort of a run rate, revenue generation capacity? Because the executive search business would depend on the opportunities that land in your lap every year and what your client are supposed to be, spending on hiring. So any sense on that? Are you developing any business where you have run rate revenue which can meet your costs?
So that's where our 2 businesses will help us in maintaining that run rate and also give us that additional scale, which is our new business, which is the enterprise recruitment process outsourcing business, which typically has longer term contracts, which will have 6 months to a year or 2-year, 3-year contracts. So that will help us maintain a run rate, while executive search business will continue to deliver higher margins, and it will also give us the icing on the cake.
So the RPO comes at a retailer revenue kind of model where you get paid a fixed fee for annually. How does that work?
It's a blended fee. There will be a typical. We can talk with a little bit more granularity as we go forward, because that is a new business. But typically, it will have a project-based revenue or a monthly retained revenues. Plus, there will be an outcome-based revenue component as well in the RPO business. So the more number of people we end up hiring for our clients, you will have, so there will be the outcome-based revenues will increase. So, but these are typical longer-term contracts, could range from 6 months to 2 years or 3 years. with SLAs.
And the customer concentration. So you mentioned that one of your customers dropped their spends on your services this year. So from a top 5 clients, what kind of revenue as a percentage of the total revenue are you getting from a top 5 clients or top 3?
We mentioned that in the call that top 10 clients contributed 35% this year, which was consistent with 35% last year.
And your top 3 clients?
Top 3 clients should be consistent at around 13 to 14%.
Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Gaurav with India Bridge. Please go ahead.
Yeah, thank you so much for the opportunity again. What's the total, as far as India is concerned, what's the total market size in executive search business, and where do we stand on the ladder board? If you can give some sense in that.
The industry numbers are not in public domain, but from our also the research report, which was part of our prospectus, you will see. I think we are in the executive search business, we are the 6th largest probably in terms of size of revenues, and the market size is roughly expected. It's around 8,500 crore for the senior level business, which is the executive search business, and for the mid to senior level business, which is about 12,500 crores. These are numbers as part of the Ken research report. Yeah, actually, pardon me. So it's actually 4,800, 5,000 crores for the senior level business, and then about 8,200 crores at the mid to senior level business.
You can refer slide 23 on our presentation, which talks about FY24 market size and the expected market size in FY29.
Yeah. Sure. And since your base is so small, any reason why we are only looking to grow at 15% organically? Why can't this growth be faster? Since you've been in this business for the last 20 years, you have an understanding of the local dynamics. And I also understand that a lot of your competition is from MNCs operating in India. So what are your advantages and disadvantages when you compare your business model to theirs?
See, the advantages are the fact that we are locally headquartered, globally present. So we are agile, nimble. There is a little bit more flexibility in the way we work with clients. So these are our clear advantages. And to answer your question on growth, yes, obviously there is there is an opportunity to grow faster. But again, as you realize that executive search business is also about the longer term deep relationships with clients. So to replace an existing player or dislodge an existing player in a relationship, you need to give it time, and we also have to ensure that we are the right consultants on the platform. So there is stickiness of clients to the business. So that is the other reason. But we'll continue to, as you see that we continue to add new logos and new clients to our platform. So to go back to your, these are market, what should I say, there are specific, if you look at it, how do I'm just searching for the right word. So these are very specific to clients and markets, and executive search firms actually build deep relationships. So, it does take time so that I think that is where our attempt is to add the right more consultants to our platform who build stickiness to our relationship.
And one final question. I think end of last year or even prior to your IPO, you had almost 25-30 crores of cash on books. So any reason why we saw tepid growth on a top line front? It was probably not for the lack of resources, right? So any reason why the growth rate was tepid? Yeah.
See, there are two things. One is to get the right people. So it's not that we don't want to grow, but we are in the process of identifying right people and onboarding. And based on that, we recruited 5 people this year. And we intend to go ahead and recruit more during the current year. So that is the thing. Secondly, tepid growth was, we said that one of our large clients reduced, because of its restructuring, reduced the search business we got from there. So there was a drop of around 6 crores from the client contribution. If I just compare it to current year and last year, if we had that 6 crores, definitely the growth would have been higher.
Okay. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Yeah. So thank you, everyone, for participating in this earnings call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, do reach out to our investor relations managers at Valorum Advisors. And thank you, everyone, once again for your patience and being part of this call.
Thank you. On behalf of EMA Partners India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.